The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday on market days. And what we're looking at here is a very nice rebound from an earlier sell-off. And now the Dow's up 5 at 18,230. Yesterday's high was 18,244, I believe. So we'll see if we can break to a new high. The S&P is unch at 2112, and you've got the comp index up 11 at 4979. Let me just check this out here, move it away. And you've got the VIX index down 12 cents at 1372, hanging in that 13s area. Moment it starts to get to 1460, 1520, you're going to see this market pull back. I had drawn in yesterday when we had a caller and I was showing the E-minis. I said that this is the pattern I'm looking at here. There's an arching over. It's going to get harder and harder to make significantly higher highs. Can go slightly higher, but in the meantime, I've got this as leg E, possibly a trough, a peak E, if there's no new high above 2117.75. Here's a 120-minute chart. Look at these arch formations with the right side of the arch higher than the left side, and it keeps coming back. Very hard to actually trade these unless you're very short term. So you get this huge move up from the 2080 level in the E-mini, and then you go to 2099, you come back, you retest, and you go to 2082, just 2 points higher. Then you push up to 2108, pull back. Then you go to 2115, pull back a little, make a Chapman wave Roman candle. I showed that to my subscribers this morning, and that says, let me open this up and you can see what I'm looking at. It says there's a good chance that if the price comes back and trades within that wick, halfway in the wick, and holds there for a little while in a shorter term time frame, you will retest and probably break the low, and that's exactly what happened. That low of 2107.25 was broken with a double bottom here at 2103.75, hit twice. Hit at 10 o'clock, and then the 2-hour line at well, it can't be 12 o'clock. Oh, this particular bar is still active, and we're looking at this bar with the low, parallel low. Good rebound, but the MACD and the stochastic haven't really confirmed it yet, so we might start just stalling in a very short while. Most importantly, what I'm looking at here is, let me move this away now. So move this away. And I'm going to go to the cash S&P because that's the one that, in fact, we're focusing on now even more than the Dow. Leg D, possibly a peak D with a little doji candle yesterday. If there is no new high above S&P 2119.59 today or tomorrow. But this is leg C in the weekly chart. And where leg C says, in the Chapman wave methodology, the chances are, and for those of you who are perhaps a little fresh to my work, let me go to this chart right here. It'll take a moment to come up. All right, there it is. Now, that's not what I want. This is what I want, so let me show it to you right here. Just in the most simplistic way, I'm just showing you there's a low bar that starts a brand new move, and that move goes peak A. That leg is called leg A until it makes a peak, and then it's called peak A. Then there's a pullback. That's wave 2. Wave 3 in the Chapman wave goes to leg B. Leg B pulls back and makes wave 4. Wave 5 starts 1 penny above peak B, and then goes to C. C is leg, look, 1, 2, 3, 4, 5, leg 6 down. And I used to call this a 7-wave series because I always thought that you go to 7 waves and then you make a pretty sharp sell-off until I found out you could go higher. So I stopped calling it the 7-wave form. But 7 waves is what you want because leg D starts when leg 8 wave 8 is triggered to the downside, and that gives you D. Your objective in the Chapman wave is the most simple thing. It is to find the most identifiable low bar and then expect A, B, C, D. And then other things can happen. Well, look at this chart. This is the E-mini. It went A, B, C, huge leg D, and then kaplop. So it doesn't always have to kaplop. It could have an instant restart, a whole bunch of things. But your objective, just to make it real easy, is to get you at least to a D. Well, we've got to the D in the S&P. We don't know if it's a peak D yet. It's still leg D. But there's a good chance that we might struggle to make that slightly higher high for leg E. Or an instant restart. But in the meantime, I'm looking at the weekly, and that's the thing I want to focus on. The weekly is saying it's just a beautiful up channel. It's remained in the up channel. Whenever it gets to this particular area right here, I call it the Chapman wave inside track. It is the reversal, the sell zone, the repellent zone. And that's what you've seen. Look, how many times has that happened? Well, I just have to expect that it's going to happen again. If it doesn't, it goes above the green line, and that's really positive. It raises the base. Let's put it that way. I'm expecting that if there's weakness tomorrow, that we might be seeing something very unusual. And that could be that there's a pullback all of next week, in the sense that you can pull back into maybe Tuesday and then start another rally Wednesday afternoon, Thursday into Friday. But it's only Monday of the following week that we trigger a leg D. This is just hypothetical. There's still internal strength. You can see that internal strength. Look at the QQQ series. So that's my thinking. Okay, let's move on now. If I look at the QQQ series, 1, 2, 3, the QQQ series is saying, hey, I made a peak B if there's no new high today, but look how well I'm doing here. I mean, this is fantastic action with a MACD like this. This particular pattern says that you could go to a C and a D and maybe even an E and an F or even a G, because it's just so strong. I don't know yet. All I can say is that it would take a close underneath. It's at 108.73, up 40 cents. It would take a slide and a close decisively under the 107.67, even the 106.86 area to really say, that's it with the daily. We're going to have a really longer term pullback of maybe 6 to 11 sessions in the daily. I don't see that just yet. So I'm being a little bit cautious here. We've actually instituted a short. We'll see if that short is going to work. I've got such a tight stop. It doesn't matter if it doesn't work. And we're about to implement some kind of other action that's, I would call it more insurance than anything else. So this is what we're looking at here. The action that has just transpired over the last, I would say the last hour, is very important because it shows end of the month buying coming in. That's what you expect, and that could go on to Monday or Tuesday. But if the buying doesn't really take you to significantly higher highs in the Dow and the S&P, it's saying, hey, we're bumping into a lot of resistance here. But you've got to expect some kind of a consolidation. And I haven't got the bigger sell signal in yet, which I'm anticipating when we finally make that leg D in the SPY and the S&P. The Dow's already done it. And you remember what's so funny about this? Oh, I meant to ask Tom about it. He's one of the few people that I know that will probably make a big deal out of something that most people would just ignore. That spike high, that aberration, that last 4 minutes, I think it was, of the trading day of, I don't remember the day, back in December, the week of the 19th, out of the blue, only the SPY went all the way to 212.97. It was way above anything that it had been trading at, and was triggered by what they call a fat finger. I thought it was a mistake and never got fixed. Now I see why it never got fixed, because there actually were trades there. I don't know. I hope the person was short, because if they were short, they made a ton of money from 212.97 down to under 200. But I have no idea. But it's ironic, because sometimes these crazy aberrations of a bad tick or something become a projection. And I remember at the time saying to subscribers, is this something that we're going to hit? I never even thought it, because we were way down to the 202, 200 area. And you know what? Oh, it wasn't the person, it was the Fed. Oh, that's right. It was from the Bank of New York or something, governor, something happened. Whatever it is, it did trigger trades at that level. I just can't believe it. I said, are we going to come back to that level? Is this really a prognostic indicator? And here we are. The high was 212.24 yesterday. We came within, 70 cents? Unbelievable. 75 cents. And 30 Liberty Street Trading Desk, baby. Federal Reserve Branch in New York. Yes, I remember. It's all coming back to me now. It got a little fuzzy. There's exactly what it was, and I want to send a number of emails about it. I did read it. I did remember it, but then I just forgot exactly who it was. And that fat finger, I don't know what it was, but is that saying that the target is really going to be in the 212, 97 area? I think so. I think that's where we're going over a period of 2 weeks or so. We'll see. It could be today. Who knows? Anyway, so I just wanted to get that out the way. Let me just go on. The TLT is now down. It was up earlier. It's down at minus 42 cents at 129.81. Had a really nice ride. And you remember what I did? I drew this in for one of our callers. I think it was John in Philly. And I said, you know what? I'm going to draw this in, and that's what I'm expecting. A lowercase h in the Chapman wave that can make an M pattern, lowercase m pattern. And what I did was I said in the weekly chart, this is what I'm going to do. I'm going to didn't I have this all notated in the daily? Why is that arrow down there? Oh, what is that? Oh, E. Has there been something going on here? All my notations disappeared. It's underneath my MACD. Let's just move this aside. Doesn't matter. And what we're going to do is we're going to look at the weekly chart, which made a peak F. All my notations gone. But what I had drawn, there it is. You can just see a little bit of it right there. I said I'm going to draw an arch formation, and I had it somewhere in the 165 to 66 area, and I said, no, that's too high. I think I'm just going to make it run about 163, 164, and that's what I'm projecting. And even in the week March period that I'm expecting for the market, when we finally get some kind of a short to intermediate term top, I think that the bonds will spike higher, and at that point I will raise it, and I'll say 165 to 166. Right now they're 162. So that's what I'm looking at. Gosh, how did that happen? Oh, that's right. There was a big difference between the outer month of the bond contract and the continuous contract. Got smoothed out. Boy, did it get smoothed out. So it's smoothed out. So bonds are now down 0.5 point, and that's interesting. So it's feeding some money back into the market. Now, just one little quick word here before we go to a break about net neutrality. I think the best definition I had of it was to turn it into a utility. I'll be right back, and we will look at the market in greater detail, look at gold and silver, etc., and the dollar. Be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, and let me just do this. My engineer. Please slide to the left. Okay, I've done that. Dow's down 2, S&P's down 2. I just received an email. I got to say, hey, congratulations, Mark, one of my tennis partners, writing to tell you that I've accepted the position of president of the Science Philanthropy Alliance, SPA, consortium of 6 foundations dedicated to the support of basic science, and its mission is to substantially increase philanthropic giving to basic science research. Today's press release is attached. Very nice. Oh, based in Palo Alto. I lost a tennis partner. Darn. Well, maybe when he comes back to visit, we'll play. Congratulations. That is nice. All right, so let's get back on with our story. Question about Facebook, and then we'll get to the other stuff. Yeah, Facebook is in leg C. There's a left side, right side price time match, which should actually go to today to get to the 82.17 level. I'm not sure it'll do that, but this is really good action. The stochastic at 82%, MACD good. It's the weekly and monthly charts that I was watching real closely because they almost broke down just the week of the 13th of February, 3 weeks ago, and held the support of the Chapman Wave inside track. This is a rising wedge formation, held the support, broke above the 9 EMA, and today is really good action. Says to me it's a good chance it's going to go to leg C in the weekly above 82.17. Everything will be in concert. Maybe that's by tomorrow. And then it says maybe a week next week or so. And then sometime in March, we make that leg D. Yep, the only way I can count it, that's the way it is. And then what happens is if it goes to G/C, I have to say that Facebook is likely C in the monthly chart. So I hope that's a question that I got asked. I hope that's an answer that I can give back to you. And yes, I just wanted to say that once they start to turn, I remember writing. I can't remember. It was in my opening call daily newsletter. I remember talking about the internet and saying, wait until we get to a point where we pay per line. Or if anyone remembers how I used to pay per minute on the telephone, especially international calls. I know that very well, international. Quickly, you hand the phone to one another in the family. Nobody actually says anything because you're so busy looking at the clock and saying, hey, quickly, move. So nothing actually happened. Nothing got said. You just heard voices. I wonder if that's going to happen, because I remember driving back from Brooklyn last year, and I turned to my wife and I said, this is just an amazing thing. There were cars going this way and cars going that way. It was really heavy traffic. And I said, what an age we're in. The cars are doing exactly what the internet is doing. It is taking us from places. Anytime we want to move to the left or to the right, we can just do it. What's going to happen in the future when they have those cameras everywhere, and every time you go through the toll, not only does it give you that automatic payment, but it times you, so that when you go through the next toll, because you went quicker than the 60 or 55 mile an hour limit, it automatically gives you a fine for this overspeeding. And that, I think, is exactly where we're going in the automobile. That the freedom that we have now to do just anything we want is going to completely change in one way or another through regulation. And it'll be ironic because we'll have cars that will be the safest cars you could ever have, but we won't be able to go fast. You'll have cars that can do almost anything because it'll have all the electronics, but it'll all be regulated. So you actually don't even do any, you do less than you can do today. And that is eventually what's going to happen to the internet. You won't have this kind of freedom, and you'll be paying for everything. And all this stuff about making it fair, this I don't know, they come up with these titles for these things. If you had to dig deep and always ask the question, what is the title? And then say, not like I always say, if a politician says something, always add the inverse. If they say, I'm not a liar, then that means I'm a liar, So every one of the titles, whether it's the oil, whether it is the internet, whatever it is, the title of the legislation invariably is the anachronism. It is the exact opposite of what is supposed to be the stated objective. All right, so enough with that. And the irony is that in some ways we will look back and say, hey, that was not a bad thing, and that might be for morality reasons or whatever. I have no idea. And in other ways you say, oh, my God, all that's happening is it's getting slower and slower, and it costs more and more, and we can go to fewer and fewer places on the internet. So, boy, was that nice, huh? That's a thing to look forward to. All right, let's get back to our story. So here we go. We've got Facebook looking quite good. It's got tremendous support. It's at 8108. It's tremendous support at 79. So I never got to gold. I'll do gold right now because gold had a very interesting session, but some of the gold stocks are acting very, very well. I'll be back and we'll talk about it and see if March is going to be a bounce month for gold. Be back. Basil Chapman, Tiger Technicians Hour. Give a call.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, we're going to go to Neil in Portland, Oregon. Hi, Neil. How are you?
Oh, I'm good, Basil. I hope I'm not breaking up too much here with a cell phone, but I wanted to ask you a question on the Dow Daily. I had written in a pattern that you use called the falling axe.
Yes.
And I was wondering if that was valid. And I also wondered, you used to give a projection based on that pattern as to what it could expand to once it, I believe, penetrated through that outer barrier. So I was just wondering if you might go over that and give me that projection, if you would, if that's valid.
So are you able to see the charts right now live?
I am, yeah.
Okay, so then right at this moment, you should be seeing there two falling axes. One is the pattern, the very larger one that started from December the 26th at 18,103, and you made lower highs and much lower lows until you made this kind of cup formation, went down to 17,037 on the 2nd of February. That's one, because you broke out of it, and normally what you'd get is a one-to-one expansion. That's really your question, and I think this is the answer that you're looking for. And I'm going to make it a different color so everybody can see. I'll make it a little, just for now, I'm going to make it fatter. So make it nice and fat. I'm going to make it pink. And let me see what happens with yellow. Oh, no, yellow's not exactly good on a white background. That was dumb. Let me make it pink. There it is. So now I'm going to go one for one. And there it is, that's your projection right there. And that projection says 18,328, would be the projection. Well, normally what I take, we didn't actually have a trough. Normally what I do is I don't go automatically from the line. Let me just have a drink of water, got a little tickle in the throat there. Okay. Normally I start off conservatively and I go to the nearest trough below the trend line. Well, there isn't one, but there's the 9-period moving average. And that 9-period moving average says, okay, I can project out to 18,290. But if I take it in exact 1-to-1, I can move it up a little bit higher and I can go to 18,000, somewhere around 320. That's the one projection. Now what I'm going to do is just to get rid of it for a moment because I don't want things to get a little too messy. And then there's
Basil, excuse me a sec, but you're effectively looking at the low point again for the move inside that axe pattern, and then up to the top of the arc. Is that your point by which you're going to take again the the add on top of the arc? Okay.
Yeah. So now let me do another thing. So let me explain. From the 200-period moving average, which it hit exactly when it went to 17,037, the Dow went up to the trend line on the 3rd of February at 16,670 and just couldn't pierce it because the level to pierce was 17,705. But the very next day, it pierced it but closed underneath it. It went to 17,782. But then the following session was very strong on the 5th. And now it tells you that that line should become a propellant line, and which it did because there was a test of it on the pullback. So I don't get a trough. The only thing I can do is sometimes I'll take the doji low or I'll take the trend line low to get the expansion. And that takes me a little bit above where we are today, so maybe 60, 70 points, all right? That's number one. But then I had another little one. This is also the Chapman Wave falling axe. If you go to peak B at 18,052 on the 17th of February, there were lower highs for the next day and actually partially the following day. But you can draw a trend line from the high that was made on the 13th to the lows that were made on the 17th, on the 19th, and on the 20th. And because of that, that was a nice springboard. And if you look at the MACD didn't even blink. It didn't even notice that there were a couple of pullback days. That was very powerful action. That's the reason why I kept wanting in my opening call to get the long side of the Dow. Now, what's really interesting is that you've got that expansion. And this one here is just a little tiny one. It's already almost did it intraday between the low that was made on the 20th at 17,878 and the breakout point, which is round about 18,040. So it did that in 1 move.
You wouldn't take the entire length of that C leg. You would just effectively take it up to the arc and then add that on as a projection point. Correct?
Because I can only take it from the tail, from the low bar that's made within that context of the trend line. If we went much lower, I'd have to make a lower trend line.
Yeah, I think the mistake I was making was I was taking it the entire length of the arc, at the point whereby it cleared the low, and that's not correct. Okay.
So you've got exactly the right idea. But the one thing that I would say is that the 1-to-1 in the falling axe formation, I'm always as conservative as possible. And then, of course, it's better to be conservative and hit the points and then go to the expansion than to have your price target of 18,000, say 290 sitting there, and you haven't even gotten close because you're falling back, because this pattern becomes a big barrier if there are a number of closes below the trend line after breaking out. That's the importance of this trend line. I always leave it there. I don't usually erase it until way afterwards, because it can, in fact, you know what I'm going to do? I'm going to say extend right, and we'll just leave it there. I'm not going to say a word. Give me a call about this trend line when we start coming down, maybe in March, and let's see if this trend line becomes the major support level. I don't know how it works, but ever since I used to do hand charting, and I would have these long pencil trend lines sitting there, and months, sometimes even a year later, I say, good grief, this trend line is still continuing from way back. I don't know why they are so important. Well, I shouldn't say I don't know why. I have a very strong inkling why, but it is amazing when they actually hit. It's something, it's like a gap that you forgot all about, and then all of a sudden the market reverses down sharply, and then out of the blue you're looking, you say, oh, there's that gap. That's the target. So we'll look at that trend line and see what happens over a let's call it 4 to 6 weeks.
Well, I hope it does use as a support level, because I'd love to see the market down there, put it that way.
You and me both, and I think a lot of people. And the reason being, if there is a very sharp pullback, I want a pretty sharp pullback coming up in the very next big pullback. Why? Because that starts to set the stage to see if I'm correct in saying 2015 should see a really sharp pullback and then a whopping gain to the upside. Hey, I hope I'm right. We'll see what happens.
Well, I'll tell you, one of the fundamental analysts that I listen to, a guy named Louis Navalier, has been positive on the market from a fundamental standpoint for 5 years. With the strength of the dollar, he's become, let's say, defensive at best. And, you know, if in fact his thesis of, again, strong dollar means less earnings from international companies, plus you have the oil debacle, you know, might be setting yourself up for a difficult side on the earnings of a PE ratio. So we'll have to see, obviously.
You could be right, and I don't follow his actual work, but I've followed Louis Navalier for 20, maybe more, 30 years. I don't know how long it is. I've met him. I don't know him personally, but he has a particularly good technique at doing his niche thing, which is these what we used to call over-the-counter stocks, the ones that people don't know about until they become highlighted, and he's already in them. So I'd respect what he says. So, hey, thanks so much for calling, Neil. We're going to be watching this real closely. Thank you. So let's go to Dave in Boston. Dave.
Basil, how are you today?
I'm good. I haven't heard from you for a while. How you doing?
No, it's been a while. I've been digging out.
You and me both.
Hey, I'm looking at natural gas, and we had a big drawdown today, and I'm wondering about taking a long position in UNG right at the February 6th low around $13, and I wonder what you think about that.
So this is a pattern that I've been discussing here for a long time. It's a pattern that some of us are very familiar with because it recurs like a ditto pattern. It just comes up and comes up and comes up. Very often it comes up in weekly charts. And what is it? It's the pattern that I describe. I described it just now in bonds, and I'm going to describe it again in the, and I discussed it in gold. But it's the pattern in the weekly chart that looks like a lowercase h. Let me just draw this in over here. So you've got a sloping back. Sometimes it's not sloping, it just comes right down. But it's a sloping back. And then there's a rally in a lowercase h pattern that starts to fail, and it arches over. The big test is, does it break the left side low, as it did when UNG, Natural Gas, United States Natural Gas Fund, trading at 13.82, down 69 right now, broke its low of 18.95. That was the week of October the 31st, 2014, and it broke it the week of the 5th of December. And then it went to a one-to-one, even more than a one-to-one to the downside. Now we've got a slightly different pattern in the stochastic and the MACD. And what I'm looking at here, so what you would like, ideally, what kind of stop would you put in if you got in at the low, the most recent low of, say, 13, somewhere in the 13, 12, 13, 13, $13 area? What kind of stop? How would you protect yourself in this particular?
I mean, the next swing point is, really, there isn't much below it.
That is a problem, right? I mean, if you look at,
yeah.
I don't know if you can see the charts while you're talking to me, but I'm opening up the monthly, and the monthly says the pattern we've seen in crude oil, the pattern that we've seen not quite yet in gold, but it might get there, the pattern that we've seen in many of the commodities. Especially, it looks like there's deflation in commodities at this particular point. Gold is only a little different in that it has the currency of fear factor. But natural gas looks to me, with this H pattern that went to a lowercase m pattern, If it breaks down and goes underneath, I must update that. The low is 1312. I've got 1409. If it goes, see, 1425 was the very important low in the UNG contract back in April of 2012.
Right.
Now, my rule of thumb is a very simple one. If in the H pattern, especially if it becomes an M pattern, lowercase m, especially if it has a continuous pattern, which will happen in the weekly, if that left side low is taken out, you have that bar, doesn't matter whether it's a 2-minute chart or a multi-month chart, it doesn't matter, a yearly chart, you have that bar and the very next bar in which to get back and to close above the left side low, which is 1425, or there is the vulnerability. Oh, I don't even want to talk about it, but I have to. The vulnerability of doing a 1-to-1 to the downside. I mean, I can't believe I'm even saying that, but then again, I couldn't believe I was saying it when I spoke about crude oil, which in fact is almost done the one, not quite, but it's real close to that 1-to-1 look in the monthly chart. So you do not want to be vulnerable. That's the only reason why I asked you, what would you do for protection? So, all right, so you would have a stop and you'd have all your little resources put in to say, if I'm wrong, I don't want to be holding gas as the gas deflates and starts to go down. So now let me tell you what I'd be looking at. Because your idea in this particular H pattern, the severity of the move down this week says that next week you better get a little bit of a bounce, because if you continue at this rate to go down, you might not stop at the 1420. What was it? Did I say 13?
1311 actually.
1312 or 1311.
Yeah.
So it might not stop there. So I'm going to make two suggestions. One is I would not put in a buy until canceled buy at that price, even though it would be fantastic if it just touched 1306. And it went under it and then went right back again. Actually, even better if it doesn't touch 1311, but touches 1315 and then has a very strong bounce. But I would rather wait for a little bit of support rather than the V-shaped pattern, because that would be the best pattern. I would still rather wait to see a test of whatever it is, because look, the next level is 1364, the low of the 13th of February. And we're really close. I mean, the speed with which gas is coming down. Now, Steve Rhodes had a chart of the best time historically to be looking at natural gas. I think we're April. And we're coming up to that period. But when you have chart patterns that you use as a template, you could have a perfect template, except you could be like 3 days off. Everything looks great. Even when it recovers, except that your entry point is 3 days early, and you can get smacked real hard in 3 days, and then it looks fantastic. So I'm going to suggest, since you're obviously following this really closely, I would hold off, see how, first of all, the left side low of 1364 is any kind of support. If it goes through that, then I don't have to tell you you've got the gap of the 10th of February. The low of 1349, the previous day was 1312. That gap area is going to be absolutely critical. If it holds and it turns to the upside, you could have a very nice bounce all the way back to the recent high of 1524. So,
outstanding, Basil. Thank you very much.
So have a little patience, see what happens, and then you can say, and I'd start slow and I'd add on the way up, not the way down.
Thank you, Basil. Great talking to you.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. The Futures Hour, next on TFNN.
Hi, folks. So let's just look at this. The Dow's now down 9. S&P's down 1.3. This is very interesting because there was a lot of momentum, a lot of excitement going into the highs over the last few days. I get a little nervous when I hear that, so I said to subscribers, we're going to be going a little slow on our long positions. We're going to actually try to get some short positions, which we have, but I don't think I need to be heavy short or long right at this particular point. Why? Because I am still anticipating that we're going to make higher highs. I still say slightly higher highs going into the first or second week of March. Then I'm not sure at all, because I believe we should get a pullback. Whether the pullback is just another one of those 3, 4, 5%ers, or whether we actually get a double-digit pullback is going to be a very big issue. I was asked just now about the XLV, and let me show you something very interesting. The XLV is in leg a peak D/C in the daily. That is the S&P Select Healthcare Spider Fund. But it's the pattern. You remember I was speaking a little earlier on. We had our caller from Portland, Neil, wanted to know about the Chapman Wave falling axe formation. Basically, it is a wedge formation. Here you've got just a normal, what they call a flag pattern, right? And that flag pattern says there should be a breakout to higher heights. The MACD is looking good. So stochastics at 93%. So far, the XLV is looking very good. And it is screamingly, how can I put it? At 120-minute chart, same thing. But, and peak F, and now starting a brand new move, maybe this is A, we don't know. But the steadiness of the monthly chart is just beautiful. I mean, it's not even used the 9-period moving average as support because it barely touches it. It's like this ballet dancer just pirouetting above it, doing those little, whatever they do with those with the legs. But here's the interesting thing. The weekly chart is in G/B, and it's saying quite clearly that the recent move up hasn't got the same integrity as previously, yet there's no sell signal starting in the daily yet. So I'm watching this and I'm saying, is this the rotation we're looking at? Is this going to complete the move, the healthcare going into early March, and then maybe they take a break, and then maybe the other sectors come along? Well, can the XLF, which is just doing its stuff, can it build a pattern that doesn't make the H pattern in March and go all the way back from the 24s into test the 23 support, 2290 support? Is that a possibility? Surely when the market's vulnerable, the financials pull back. You know, sometimes it doesn't work that way. So we're going to be watching this because you do need another sector to really come on strong in the second half of the year, if I'm correct in saying that there's going to be a pretty good rally. After the 6 weeks or 8 weeks pullback. Well, we haven't had a 6 to 8 week pullback. So this is going to be very interesting. Why? Because the XLF is, look at that. It's got a lot of catching up to do. Can they ever do it? I don't know. We'll see. We'll see our support. 200-period moving average is at 22.35. It's only 2 points above there. It could do 2 points in a very short period of time to retest it. So I'm looking at different sectors for my subscribers to say, where do we want to be for the next potential big move? So we'll be talking about that. Meantime, back at the ranch, just before we wrap up, let me just tell you, in the Dow, I'm expecting it's going to be a little tough here to break out. Could be wrong. You never know by the end of the day. But I think we're going to make a peak D, pull back a little bit. I shown in the E-minis that there could be some kind of pattern that looks a little bit like this, a little pullback. Maybe it's 3 days, 5 days, and then maybe we take our time to come back next week, at the end of next week, and we'll see what happens. But in the meantime, back at the ranch, no real big signals here, and watch that volatility index. If the VIX starts to go into the 1480 to 1530 area, then this market starts to pull back a little deeper. Hey, have a great day. I'll be back tomorrow. And
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.